Hi, and welcome again to another edition of Market Analysis for today, November the 17th. I'm Giovanni Betancourt, analyst, trader, and educator with Vantage Markets. Well, fair warning. Much of Wall Street sounds pretty downbeat right now. Some U.S. analysts have broken down their economic forecast for 2023. The consensus of it was that the U.S. is on a collision course with a recession, and the Fed will have a hard time driving the economy toward anything else. But before we get to that, I've got a couple more tidbits to put on your radar for today. UK inflation just hit the highest mark since 1981. Authorities are in talks to bring in FTX Sam Bankman-Fried for questioning. First, they have to find them. Private equity firms are said to capitalize on an economic downturn. All right, well, that being said, not betting that the Fed can avoid a recession, as some policymakers expect rate hikes to continue into next year and further squeeze the economy. The FOMC still has 100 basis points more of rate hikes to go. December will bring most likely a 50 basis point hike, and then investors should expect 25 basis point hikes in February and March. The almost 500 basis points of expected cumulative hikes is already delivering a commensurate tightening of financial conditions, which some believe will tip the economy into mild recession later next year. The Fed's aggression won't let up because inflation has proved stubborn. The most recent CPI report showed signs of easing as the reading came in below expectations. Nonetheless, prices remain 7.7% higher year over year. The labor market is one key variable that policymakers will surely be watching. Remember, more people working and earning means more money being pumped into the economy, which means prices will stay elevated. And to cool down the economy, then the Fed will likely look to tame hourly wage growth and push the unemployment rate higher. By most measures, hourly wage growth is currently running around 5%. That likely needs to run closer to 3.5% before policymakers can feel more comfortable about returning to 2% inflation. And that sort of wage growth deceleration will likely require an unemployment rate between 4 and 5%, depending on how entrenched wage growth expectations have become. Now, the Fed's tightening efforts ultimately will tip the economy into a recession, and analysts have said that. Now, since it's not a secret or unexpected, a recession could be mild, and if we do have a downturn next year, it will be the most well telegraphed recession in modern memory. That fact alone should change the nature of the slowdown. So, with that being said, let's take a look at what we can expect out of the markets today. I honestly think that today is going to be one of those calm days. All right. As far as important news comes out, we'll continue to get them. But earnings seasons have really ended, and so we should be looking at what now that the dust is settling, really where will the indices point towards. I'm having my support at 11,200 and my resistance at 11,800 for the Nasdaq. Right now we are in between at 11,600. Any other continuation to the upside will find that resistance. Any sell-off or anything lower most likely will find some support initially at those round numbers of 11,400, 11,200, and then obviously 11,000 being a psychological support level. As for the S&P, that 4,100 marker, we see it now a bit further, but it's still on the radar. We could probably see that next month, or by the end of the year. But looking at the S&P to stay around these levels is more likely. For now, for today and tomorrow, I'm looking at the S&P to stay above 3850 and right below 3950. That 100 channel, 100-point channel. Then as far as we have for crude oil, well, yesterday the United States inventories came out lower than the previous week by 5.4 million barrels less in production. So that should have entitled a move to the upside on crude oil, since we could say that, hey, what happened to this crude oil? But remember, this information is really 1 week behind. We got it yesterday of the previous week, and that information that we got yesterday was about the previous week comparison to the previous week. So we are a week behind that momentum of that motion. So for now, even though obviously inflation, crude oil plays a big role in inflation, could we see the crude oil revisiting the low or where it started trading from when we began the year back in January the 3rd, where we were sitting right around $76, and from here we skyrocketed all the way up to 126. That was the high of March. So basically in a 3-month period, crude oil jumped right around $50, and from there, okay, it retraced back down to $92. It made another attempt at high, and obviously this is where the war broke out, and from here crude oil reached 120 on June, and from that high of June is when we revisited our initial point of $76, and from here we have been making a double top in a way, okay, and from here another attempt, another leg down. So revisiting that low of 76 by the year end could be one of those key elements. But we have something that we gotta keep in mind. December 5th is when all of the new sanctions are gonna be kicking in. 2 million barrels of Russian oil is coming offline, okay, so about 2 million barrels. So that will imply that prices could spike back up to 120. Okay, that could be the case. Looking at this from a point of view of a technical analysis view, if we grab the high and we just kind of, let's say for example, draw this line on this, if we want to be able to say that we have been on a downtrend, the line could probably start from here and place it here, or should we place it on this part? But we could probably also do this so far and just basically say that point high or no. Well, this will be on a daily chart. That will be the best case scenario. High, at least 2 points touching. So market retraced, made a bottom. It bounced. It did take out the previous high. It didn't take out that previous high. Market made 2 attempts at taking out that previous high, which it didn't. So that is pressured on the upside. Okay, from here, from this attempt, market has retraced. Okay, it retraced and it's found right now, it's finding support at around $83. So the key here will be, will market make an attempt and bounce off this around these levels and back up again to make another attempt of taking out that previous high, or at least coming and revisiting $92. A lot of scenarios can happen. 3 scenarios can happen. 1, market does that, attempts at taking out that $96 high, or at least the 92. Market drops and revisits that $76 low, or market just fluctuates in a lateral way around between these levels, 80, 88, in the middle at 85, or just stays flat out 82. So horizontally trading, range bounding, that could be also another case scenario. So just keep in mind all of those things and see what can happen in crude oil. Nat Gas, however, has made an attempt to come up higher, coming out of that tight range that has been doing so far this week. Taking a look, trying to come up to at least 650. Could that happen, or will it find resistance and bring it back down to 60, going back down to 550, and again rebound from here? Then we have gold. I'm looking at gold to stay really the same scenario, unless the dollar index kind of drops and breaks where it's at. That breaks at 105, which is the key support level for the dollar index, which them two has a negative correlation. If the dollar index rises, gold drops. If the dollar index drops, gold rises. But if the dollar index ranges, then gold will need more fundamental reasons to move to the upside. Obviously, I understand that we are in a geopolitical uncertainty because of Russia's invasion in Ukraine, so that's a real factor in. So for gold to really make another attempt, move higher to 1800 to come back and revisit 1800, we'll need something really, really spectacular. But right now, I'm looking at gold to also just stay idling above 1750. Silver, the same token. Silver had a nice run to 22. A lot of profit taking has happened in this pullback here. So we are contemplating that silver will also stay idling above 2050. And as far as copper goes, copper, did that phenomenal run also, looking to reach $4, and a lot of profit taking has happened. It's found its footing around 360, 365 ish, and if you look to the left, all of this area here could probably be a nice support area for it, and to make another attempt at 380, that could be possible. And Bitcoin, well, you see this very low, very tight, very shallow candles, to me, is just telling me that this thing is about to perhaps flush down the toilet. If it comes out to 15.5 again and revisits that low and breaks that low and continues to move lower and breaks 15,000, the next support level is 12,000. So be aware of that. And then the euro's really looking to stay above 103. So let's see if that will be the case for it, and just fluctuate around it. As far as for the pound, well, that news about the inflation being highest since 1981 has taken the pound to find some support, really around 117 and a half ish. So let's see if that will be the case, or will it also stay quiet and just straight around the 117.5 marker. As far as the dollar index goes, well, it's looking to stay below 117. Okay, so that will be a psychological resistance level for it, and then for it to stay above 106.5 is most likely to happen for it. All right, well, that's my analysis for today. I hope you like it, and I'll see you tomorrow. Have a nice day.